Another video on the channel. My name is Brandon, and in today's video, we're going to be going over some of what I believe to be the top ETFs to invest in 2020. And this is a series that we've done for the past couple of years. It's been quite a popular one. As we know, people love the approach of index investing, of ETF investing. Let me make this clear. As I do all the time, I'm not saying that these are going to be the best performers over 2020, but these are some good funds that you can invest in. They can make up a part of your portfolio. And of course, we're talking over the long term here. And I do have actually a pretty unique mix of funds today. We're actually going to be going into a couple niche ones, and then we're going to finish off with actually a speculative fund, which we're going to put a disclaimer out there when we get to that one. I will just say that if you are looking for some core ETFs, like if you're brand new to investing and you want just broad exposure to Canada, broad exposure to the US, check out the videos that I have done previously to that, because I don't want to repeat myself here. I'm just saying in this video, we're going to be covering a couple unique ones. And I guess we can start off with this right here that you're looking at on the screen. We're going to be starting off with the ETF VRE. It's the FTSE, or it's the Vanguard. The Vanguard is the company that provides this ETF. It's the Vanguard FTSE FTSE Canadian Capped REIT Index ETF. And we get so many questions on the channel about REITs. Hey, what do you think about REITs? Real estate, all right? A real estate investment trust is what a REIT is. And essentially this ETF is a bundle. It's a package of some of Canada's most popular, some of the most high quality real estate investments. So you can imagine that, you know, how well this fund would give you good exposure to the real estate market. Of course, all of these will be linked down below if you want to follow along or check them out later. We'll come back to the details in just a second, but what you'll notice is that this fund essentially holds 18 REITs. So 18 different packaged real estate bundles. That's my favorite way to look at them. And by buying this one ETF VRE, you'll notice that you are actually going out, and here's the top 10 holdings of this REIT. You're investing in the Canadian Apartment Properties REIT, which is one of the most popular ones in Canada. RioCan is another very popular one that you may be familiar with. Allied, H&R, Smart Centers, you won't recognize all of these. In fact, many of them you won't recognize, but essentially there's 18 of these pre-bundled real estate investments that you can get access to by buying this ETF. And you can see by looking at the actual sector weighting, if we were to break it down a step further, it actually breaks it down into the different types of real estate. And what I mean by that is that this ETF, it's giving you about a 33% exposure. 33% of this fund is invested in industrial and office buildings. You also got exposure to residential REITs at about 23%, retail, real estate services, and then you have your diversified REIT products. So a well-diversified, even amongst the real estate sector, which is a really, really cool way to go about it. One thing that you will notice, and we do have a US funds coming up, by the way, if we do have any US viewers, but this is 100% weighted to Canada. So we're talking here Canadian real estate exposure. You notice the 100% there, it's all allocated to Canada. So again, a really unique fund in the sense that if you are looking for some real estate exposure, you can go out and instead of picking a REIT in particular and you're not sure which one to go, essentially play the field. In terms of returns, we're seeing very, very typical 8% rate of return, which is right in that ballpark of what I believe to be sustainable and good long-term, a good long-term range. I did forget to mention that one of the key features of this video of the ETFs we're going to be highlighting is we're going to be seeking income. I love the fact that in 2020, income is something that we can rely on, a nice stream of income, a nice yield, rather than chasing the tech sector, rather than chasing the NASDAQ. As we know, we are creeping on to this recession whenever it may come. In my opinion, one of the very reliable ways to invest right now is to just rely on some safe, steady investments, and real estate in almost all cases happens to be one of those. You will notice as well, a very, very popular thing here that people love about this ETF is that the dividend distributions are paid out monthly. So you will be receiving every month some income into your portfolio, currently yielding about 3.14%. In other words, that's the annual yield. If you invested $100,000, that's essentially $3,000 in income that you're going to be getting throughout the year, but it is going to be distributed monthly. So very important to know. Just taking a look at some details to finish this one off, you will notice the management fee, the MER, up at 0.39%. And that may seem high to you, that may seem low. As we know, ETF, this is far cheaper than a mutual fund, which is typically up at that 2 to 2.5% range, substantially cheaper, but it is a little bit higher than your typical broad-based index funds. You can find some as low as 0.6%, 0.5%, as we are going to look at in the next example. But when you do get specialized, like for example, this is a fund that goes out and specializes in real estate funds, you do expect that you are going to be paying a slightly higher MER. But again, this is something that I'm perfectly fine with paying to get that exposure to a broad base of 18 high quality REITs. Another point to mention here is that, again, this is a Canadian one, and we're going to have a mix of both. You'll see that it does trade on the Canadian exchange. So the exchange that this one trades on is the Toronto Stock Exchange, the TSX. The ticker is VRE. In other words, if you were to go purchase this stock on your brokerage, you would be typing in VRE.TO to signify that it is a Canadian stock. Of course, this one does trade in Canadian dollars. And the price that you'd be looking at if you wanted to go out and buy one share, one unit, one share of this fund, you're looking at about $34.50. So again, this will be linked down below. Feel free to check it out. By the way, if you are enjoying a video like this and if you appreciate the content here, drop a thumbs up, man. Feel free to drop a thumbs up. And as well, we do offer training in our investing academy. We're helping beginners every day go from nothing. We're helping them set up their portfolios. We do utilize Questrade, and we take them click by click, how to set this up, how to build their portfolios. If you're somebody that is looking for that, that'll also be included down below this video. Moving on to our second ETF for 2020, and it is another Vanguard product. This one actually is a US product. I'll explain what that means in a second, but this is the Vanguard High Dividend Yield ETF. And the ticker that we're looking at is VYM. And this is a product, this is a fund that very simply tries to track some very common large cap investments, but that are characterized by high dividend yields. So these are, like it actually mentions here, they're forecasted, the companies in this fund are forecasted to have above average dividend yields. So again, a great approach for somebody that loves the idea of income. They love that consistent and reliable flow of cash that they can accumulate into their portfolio, along with the potential for growth. You'll notice that this one does have a significantly lower MER. So the expense ratio on this is 0.06%. In other words, you invest $100 into this fund, they're taking off 6 cents in fees. So low cost, this is just as close to as low cost as it gets. As we can go through, we can take a look at the price of the fund. I guess we'll knock that out as we kind of scroll down here. This one trades at about $93 per share. That's the net asset value, the market price. In other words, if you wanted to go out and buy this fund, one share will cost you, as of today, $93.29. Again, with a very, very nice yield up at 3.19%. I'll touch on the yield actually in just a second. You can see here the growth, hypothetical growth. This is obviously dating back. This is actually a 10-year number. You can see a really, really steady growth pattern. So along with your dividends, you're also seeing your assets grow. Your net return, your total return is trending up. Performance-wise, again, since 2006, we have a nice batch of history here. We're right in that range that I believe to be sustainable. That 7 to 10% range, an 8% rate of return. Compounded, I could not be more happy with that. Taking a look down into the actual composition of this fund, you'll notice that the ETF holds 404 investments. You purchase this one fund for 93 cents or $93 per share. You are investing in 404 stocks, which is just amazing. Like, how else can you get that without the power of an ETF or a mutual fund? Very, very useful product for diversification. You will notice that although it's US primarily, like, this isn't just an S&P 500 fund, right? It's not just the 500 largest companies in America. It does have some selection in terms of, again, they're focusing here on the high dividends. You can see some of the top holdings are, of course, the quality dividend payers in JP Morgan Chase, Johnson & Johnson, Procter & Gamble, ExxonMobil, AT&T, Intel, Verizon, Merck, just some of my all-time top quality dividend payers, hence why this is a dividend fund, and these are above average dividend payers. You'll notice that if you were to purchase this fund, you will be weighted more heavily in our dividend heavy sectors, which makes total sense. Consumer goods is always known to be one of the best dividend paying sectors out there. You can think to things like cereals and toilet paper, these recurring things that we need. The companies are very able to sustain, take Procter & Gamble, very able to sustain their dividends. Naturally, we're going to have a high weighting to financials, great dividend payers as well, and healthcare. Merck, Pfizer, these companies are awesome at paying dividends as well. One thing to note with this fund, and we can actually toggle up, again, link down below. We can toggle over here to the distributions. This one does pay out their dividends quarterly, or their distributions, I should say. So although these funds, they're pulling in dividends all the time, they're constantly accumulating these dividends from these great companies, they do bunch them up, and then they're going to distribute them out to you quarterly. So every 3 months, you're going to get a dividend payment, again, with the yield. As of right now, I believe we were looking at 3.19%. So a very, very nice yield that you're pulling in. And to finish off this segment, I thought that I would, we can touch on here again, large cap. This is a really great overall fund, I believe. You're not really stretching into the medium cap, smaller cap stocks. These are all your big blue chip companies. Large cap value is the approach that they take. In terms of fees, they do have a cool little graphic here showcasing that this is the expense ratio for this fund, 0.06%, relative to the average funds in a similar category. So significantly lower. And actually, that's a pretty drastic difference in comparison to the competitor funds. One of the reasons that I very much like this option, what it says here, hypothetically speaking, is if you invested $10,000 over 10 years, this is the difference that you'd be saving on fees because of that substantially lower expense ratio. So on a $10,000 investment, you're saving $2,000. If you were to go out and be paying a fee with a 1% MER, a very broad-based ETF, broad-based fee, a very low fee for a good broad-based ETF. And to me, this is a fund that could very well be used as kind of like a core position in your portfolio. Dating back or looking back at the real estate one, I wouldn't take all my money and invest in real estate. This would be a niche. This would be a unique part of my portfolio, right? Maybe 5%, 10%, maybe more, depending on how heavy you want to invest in real estate. To me, this is one that could fall into that core component. Because again, you look at the quality of companies, the large cap, the cheap cost, I would have no issue having the core of my investments in an ETF like VYM. Do note that this is a US traded ETF. So if you were going to buy it, you would not have the .to. It's not a Canadian traded ETF. It actually trades in $93 USD because this is on the Vanguard US website, Vanguard.com versus Vanguard.ca. Minor thing to note there, but our second ETF to buy is VYM. Now moving on to our third ETF, and I will start this off with a little disclaimer here. This is more of a fun one, more of a speculation, let's call it. We're looking at the provider being BlackRock, and we're looking at the ETF XEG. It's called the iShares S&P TSX Capped Energy Index ETF. And as the name implies, this is a fund that invests in the energy sector. And much like the real estate fund that we looked at prior to this, this would absolutely be for a portion of your portfolio, all right? I would never take my nest egg, my entire assets, and pop it into one of these funds. If I wanted to get exposure to energy for 5% of my portfolio, this is where this fund may come into play. And I don't like to make short-term speculations in the market. you know that it goes against everything that we preach on this channel. By the way, if you're not subscribed, subscribe to the channel. We post videos every week. But if I were to place somewhat of a wager, somewhat of a speculation on what may be a good sector to invest in 2020, I've got my fingers crossed that we do see a rebound in energy, as it has been kind of a beaten down area. And we'll take a look at that actually right now. So in terms of the performance, we do see kind of a longer term chart, hypothetical growth of $10,000. And this dates back, I mean, I don't see the numbers exactly, but this is at least a 10-year period. We have seen a steady decline in the energy sector. And you're probably thinking, why the heck would I want to invest in this? I do believe that when you buy into weakness, we do see these rebounds. I do believe that in general, the energy sector, oil, gas, natural gas, is undervalued. I believe that we are getting some attractive prices on these assets. You'll notice here, not the most beautiful returns in terms of the 3-year number, 5-year number, 10-year number, inception even, not a strong core ETF that you'd want to invest in. But because it's been beaten down, I wouldn't be surprised if we did see a nice gain posted in 2020. That would be my gamble, my speculation of the year. In terms of this fund, if that is something you're interested in, we are talking about a Canadian fund here. So it trades on the Toronto Stock Exchange, meaning that it does trade in Canadian dollars. You'll notice here that the price of the number of holdings is only 23. It's a very concentrated grouping of oil, energy stocks. We can actually take a look down in just a second here. Let's take a look. You are getting a nice yield on this. All right. So I forgot to mention there, naturally, the energy sector does pay out some nice dividends, and your distribution yield, and this is as of January 6th, so as of yesterday, 3.17%. So regardless, as a bonus for holding this investment, you are getting a very nice dividend yield, actually right in line with some of the ones that we just looked at, which are specializing in high dividends, and you are getting that paid out quarterly. Okay. In terms of fees, you are looking at a higher fee here. Again, this is more of a speculative, niched down product. We're moving up to a 0.61% management fee. On every $100 you invest, you're paying 60 cents in fees, which at the end of the day is still quite cheap. Again, much cheaper than a mutual fund. And by nature, by investing in the energy sector, you are going to be looking at a high risk investment. There's no ifs, ands, or buts about it. We should expect volatility. We should expect a lot of movement. And again, this is a fund that I'm throwing into this video for the right type of person, for someone that does want to take a little side bet and they want to potentially make some money over the coming year, knowing that there is a high risk here. There is the chance of losing some money. Top 10 holdings, of course, we're looking at Canada's most popular energy holdings. We got Canadian Natural Resources, ticker CNQ, Suncor, Cenovus, and Canna. These are three of my favorite energy sectors, despite the poor performance as of recently. Then you start moving into some other names, which you're probably not so familiar with. Even myself, there's a couple of these that I'm not familiar with, but you can also toggle here to look at all of the holdings. Guys, you always have that option to look at every stock and know exactly what you're looking at. But this is just giving you broad exposure into the energy sector. 50% of the fund is invested in exploration and production. We have our integrated gas and oil, which makes up another very large part. And then we have a very small section for services. But like I said, this is just a fun one. I do place if I were putting my gamble on what's going to be the good performing sector in 2020, I've actually bumped up my energy exposure, and you can get a broad exposure here into this sector for $9.57. And of course, this is in Canadian dollars, so a very, very low cost ETF. Again, the reason here is to get you some targeted exposure to the Canadian energy sector. Can be used to express a sector view. And that's exactly what I'm explaining here. I believe this sector is undervalued. I believe that this might be a good opportunity for growth. So those are 3 ETFs that I will share with you today, guys. If you enjoyed, if you have any thoughts on them or any questions, leave them down below. And I would greatly appreciate it if you did throw a thumbs up on this video. Do you have any funds yourself that you're looking out for that you want to share with the others? Again, this was more of a niche down, unique episode. If you do want to look at more of those core holdings, like you're just starting out and you're like, hey, I want just an S&P 500 fund, or I just want a TSX fund, click the link down below because we do have some videos on that. If you are somebody that is brand new to investing and you do want a little bit of help, you do want some guidance in getting your portfolio set up, in actually learning what all this stuff means and really have an understanding of what it means to be an investor and what it means to build a do-it-yourself portfolio in Canada, we're teaching students every day through our Investing Academy. We work through an online training program. It's completely at your own pace. We're working hand in hand with our students and ultimately just bringing them through the entire process if they are someone that's looking for a little extra guidance. That'll be that first link down in the description below. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.